Today, as we get started, I wanted to let you know that the Edge Finder for this week is free. Until Friday, anyone who applies down below in the description for access to the Edge Finder free week can take advantage of trying out the tool and checking it out for yourself. Now, I do ask a favor. If you want access to the Edge Finder free week event, all you have to do is click the link in the description down below, fill out your accurate details so that we can contact you with your access. And I'm going to ask that you take it seriously. A lot of times people take for granted free things on the internet. I'm going to ask that you actually take a few days to seriously look through, comb through, and inspect the Edge Finder and all the great tools that we've been working on for the last few years. And if you really like it, consider purchasing it at the end of this week. And yes, this is a sales pitch. My goal is, of course, to give you a chance to check out the tool, try it out for yourself, ask questions to our support team who you'll be in contact with. And if you like it, you can purchase access at the end of the week. So the S&P 500, the NASDAQ, the Dow Jones, and the Russell are all up here today by some amount. As we go into this week, we saw some interesting stuff. Oil prices are actually down 5% as we kick off the week. They're sitting at a level of support, but this big drop comes after basically some good news out of the Middle East. Specifically, what caused the big slide in oil down 5% is that Brent crude is forecasted to average $70 a barrel in the fourth quarter of the year from $74 a barrel previously as a result of a lower geopolitical risk premium in the near term, according to Citi. The recent Israel military action is unlikely to be seen by the market as leading to an escalation that impacts oil supply. And that is pretty much all you need to know. Essentially, less expectation for supply disruption means oil prices drop, and that premium that they were sort of receiving for all of the uncertainty in the Middle East comes down a little bit. Now, oil prices down has a lot of implications to the rest of the market. One of the obvious ones is that lower oil prices could lead to lower levels of inflation, right? So if you get, for example, oil prices down lower, you got to think all other goods and services may see a little bit less of a inflation bump. Now, you got to think about the opposite case. In 2022, when Russia invaded Ukraine, we saw prices skyrocket, and largely due to the fact that oil prices went up, and oil prices impact everything else because everything else that gets distributed does so through trains, planes, ships, etc. So rising costs of fuel means rising costs of everything. That being said, the NASDAQ initially popped higher. Here is an hourly chart. You can actually see we had a big bump off of this news because, again, less inflation means the Fed could cut rates, which is good for stocks. S&P 500 up 0.5%, the US 30s up about 0.8%, and the Russell 2000 index is up 1.8% at the time of recording this. Small caps really loving the potential for less inflation and lower rates. Taking a look at gold, we do see that gold is incredibly resilient with its price action recently, had this big push to the upside, and I'm actually more surprised that we didn't get a bigger push lower off of this news as, to be honest, geopolitical uncertainty is something that has really helped to propel gold higher this year in a strange way. Remember, people who are buying gold aggressively may be doing so because they're uncertain about global events, elections, etc. And perhaps this buy the dip that came in so quickly off of this news, you can actually see if we go down to like a 5-minute chart, you had an initial drop here this week off of the same news that caused oil to drop, but then prices have rebounded pretty well, pretty quick for gold price, trading at $27.43 at the time of recording. The gold market just seems to be in a perpetual uptrend, and this is something that, in my personal view, will eventually end, but trying to time that is a fool's game. I'm waiting for price to actually show signs of failure, support and resistance no longer working so well for the bulls. If you're going to get bearish, in my opinion, wait for some signs that true bearishness is actually taking place. But currently, the chart is clearly in a strong upward trend, and fighting that, in my opinion, is a fool's game. Same general thought process for the S&P 500, the NASDAQ, the Dow, etc. I am bullish on indices and specifically watching the NASDAQ for possible retests of this area of support, but notably looking for a push through the highs. In anticipation of that, I am currently already long some positions in the stock market, such as SMH, which is an ETF that I'm currently have got a good sized position in. Another stock market position that I have is XLRE, which is a real estate ETF, which I think could continue to do well as interest rates come down and inflation stays tame. As long as that story remains, I like real estate quite a bit as a position in my portfolio. The dollar index on a daily chart looks pretty interesting. You have this really big, strong upward push, and now as we teeter up here, the question is, are we going to continue to find support around this 104 level, or are we going to break back underneath it and continue lower? In my opinion, it comes down to this week's NFP jobs number, which comes out on Friday. If you get strong jobs, the dollar index likely is going to continue its upward rally. And if you get some weak jobs data, I would look for possible signs of failure in order to look for, perhaps a bigger slide to the downside in the short term. That being said, currently when it comes to the indices, FX, commodities, etc., the top setups algorithm is where I generally am going to draw some conclusions about which direction I want to trade in. I am already long Bitcoin. I am looking at dollar CAD for possible longs, dollar yen for possible longs, S&P 500, NASDAQ, etc. Got several positions that I'm looking to possibly take trades on. Dollar Swiss is also one of them. Got a lot of stuff on the watch list here today. And if I take any trades, it will be shared inside of our Discord VIP room, and I'll show you what that looks like. Every trade that I take gets shared directly to members within our VIP Discord. If this is something that you're interested in, there's a promo code and a chat with us link down below in the description if you have any questions and would like to sign up. Now, with the trade alerts that I send, we've fully fill out like analysis, entries, exits, screenshots of the trade idea, etc., so that members can see them, learn from them, and actually gain some insights on why the trades are being taken in the first place. I highly recommend that if you're interested in trading and you're trying to get serious about it, join a group like this where you can actually learn something and see real traders in action if you are still trying to find your footing in trading. One of the best things that I could do if I was to go back to my first day as a trader would be to listen and learn from people who have proven track records. And I've done my best on this channel to share my results publicly with you. You can find it on the homepage of my YouTube channel for a reason, to show some credibility and know that you're not wasting your time listening from my videos or considering joining a service like ours. So again, if you'd like to join us, if you're serious about this stuff, there's a link in the description down below to sign up. So I want to look at some of these ideas, dollar yen being one of the interesting ones to me. Dollar Swiss is also a possible currency trade I like. I've got a position on Bitcoin, NASDAQ. There's several things here that potentially look good for me this week. And if I take a look at dollar yen as a starting point, you can see we've had a really strong push here recently. I'm looking for a possible pullback on dollar yen for long positions and continuation of this idea that we've recently seen, which is, this downward structure, which was fearful of, global economy slowdown. Well, the US economy came out roaring, and now a pullback into this area of support, in my opinion, looks like good upside potential. So I'll be watching dollar yen. Another one that I'm looking at is dollar Swiss franc. So the dollar Swiss franc has had a similar sort of chart pattern. We've broken this downward trend line, and now I'm looking for possible pullback plays, perhaps around this 38.2 or 50%. So if we get a couple down days in the dollar, I really like these as candidates to potentially go long myself. You'll also see that euro dollar is one of our most bearish readings on the Edge Finder, which if I pull this up here recently, you can see it's pulling back a little bit. I've got a position on already on this one here with a stop loss above this structure high. I do like the prospect here of lower prices on Euro USD. However, as I mentioned, if that dollar index gets a bit of a pullback, it's possible I stop out of this position and I'll just look for my next one. I've got a couple different ideas pending on euro dollar, dollar yen, etc. Switching over to stocks and ETFs that are currently on my watch list, I've currently got Tesla here. I do have a position currently on Tesla that I'll show you. So I've got puts that I've sold, which are currently up 91% or so. I have shares that I own, and I also sold a call. One trade here in the red, another in the green, and my underlying position in Tesla is very green so far. Some other names that I'm watching are UPS, I'm looking at Palantir, I'm looking at TSM, I'm looking at Microsoft. I got all sorts of different stocks on my watch list here, and some of the more bearish ones, Coca-Cola and Pepsi, I thought were interesting. Seeing some of the consumer defensive stuff getting more bearish readings currently on the stock box, which I find to be quite interesting. In terms of sectors that I'm watching, I already mentioned XLRE, which is a real estate sector ETF that I'm currently trading. I'm already on the long side of that one. I'm also long semiconductors, which is sort of middle of the pack right now. And then, as I mentioned just a second ago, consumer staples are looking a little weaker than the rest of the group. XLP, SMH, and XLRE are some of the tickers that I'm currently watching on this list. By the way, If you don't already have early information coming your way about the stock box, which is releasing on this Friday, actually, November 1st is the release date. If you do not already have access to the early info on the stock box, you can find information for that down below in the description. And you can also join our stocks and options Telegram channel, which is linked there as well. So check it out, and thank you very much for watching. If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, 8cap. 8cap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your 8cap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out 8cap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.